Today, we are diving into something massive happening in the Indian business world, the Great Tata Motors Demerger. This is a huge moment for one of the country's most legendary companies. So in this explainer, we're going to break down exactly what this strategic split means for the company, its future, and, of course, for you.
But to really get where Tata Motors is going, we first have to understand where it's been. This isn't just another car company. Its story is basically the story of India's industrial growth itself. And it didn't start on the roads, believe it or not. It started on the rails.
So let's take a quick walk through this journey, right? It all kicks off way back in 1945, building locomotives. I mean, literally building the engines for a new nation. Then, in 1954, they made a huge pivot into trucks, and they basically became the backbone of the country's transport. And for almost 40 years, that was their entire world. Then 1991 rolls around, and bam, a huge shift into passenger cars. But the real game changer? 2008, the massive acquisition of Jaguar Land Rover, which put them on the global map. Each one of these steps added another layer of complexity, which brings us right here to 2025 and this historic decision. Okay, so here's how we're going to break this all down today. First up, what's actually going on with this split? Then we'll dig into the why behind it all. After that, we'll get practical and talk about what it means for you, the investor. And finally, we'll peek into the future and see what's next for the two new companies.
All right, let's get straight to the heart of the matter. Tata Motors is fundamentally changing its shape. And listen, this isn't just some minor reorganization. We're talking about a complete separation of its two main businesses.
So the fancy corporate word for this is a demerger. But what does that actually mean? Well, think of it like this. One giant company decides to split itself into two or more smaller, totally independent companies. Each one gets its own listing on the stock market. And the whole point of doing this? It lets the market see and value each business for what it really is, based on its own unique strengths. And this right here, this lays it out perfectly. Before, you had everything jammed under one single roof called Tata Motors Ltd., from the little Tata Punch EV to a massive cargo truck all the way to a luxury Land Rover. After the split, you get two clean, separate companies. The first one is all about passenger vehicles. That's the regular cars, the booming EV business, and of course, the global powerhouse Jaguar Land Rover. The second company? That's your pure-play commercial vehicle business, just trucks, buses, and defense vehicles, the real workhorses of the economy. Now here's where it gets really interesting. Look at these numbers. You might automatically think of Tata as a truck company first, right? I mean, that's their heritage. But check out the revenue split. The passenger side, including JLR, is bringing in a whopping 80% of the cash. The commercial side, while still a market leader, is the other 20%. This just shows you that both of these new companies are more than big enough to stand on their own 2 feet. Okay, so this brings us to the big question. Why? Why do this now? Why take this massive, successful company and just split it in half? Well, the answer boils down to strategy, focus, and unlocking a ton of value that the market just isn't giving them credit for right now. The whole idea here is just laser focus. I mean, think about it. The business of selling giant trucks, which depends on the economy, is totally different from selling a sleek new EV, which is all about consumer taste and technology. When you separate them, each company can go after the right kind of investment. The EV business can attract green funds, for instance. It makes it crystal clear for investors what they're putting their money into. And on top of all that, you get two focused management teams that can make decisions way, way faster. And I gotta say, this is probably the best way to think about it. The passenger vehicle company, that's the consumption and tech story. It's all about what people want to buy, cool designs, and the electric revolution. The commercial vehicle company, though, that becomes the infrastructure story. Its success is tied directly to how well the economy is doing, logistics, and big government projects. You couldn't ask for two more different investment stories. And this quote from the company really hits the nail on the head. This is not a breakup. It's an unlocking. The message is clear. Nothing is broken here. This is a move from a position of strength, designed to unleash the hidden potential that's been trapped inside this one giant structure. Okay, time to get practical. Let's talk about what this all means for you, the person who might actually own shares or is maybe thinking about buying in.
This is it, the million-dollar question on everyone's mind. If I own a piece of Tata Motors today, what will I own tomorrow?
Okay, the good news is they've made this super straightforward. For every one share of the old Tata Motors you own right now, you get to keep it. That share will now represent your piece of the new passenger vehicle company.
And on top of that, you will also get one brand new share in the commercial vehicle company. So if you had 100 shares before, you'll now have 100 shares of the car company and 100 shares of the truck company. Simple as that.
All right, pull out your calendars because these are the dates you need to know. October 1st is when things officially kick off. But listen up. The most important date for you is October 14th. That's the record date. What that means is you have to own the stock by the close of business on October 13th to be eligible for the new shares. Got it? Then, sometime in November, we expect to see the new commercial vehicle company start trading all by itself. Okay, so what about taxes? Don't worry, it's not that complicated. Your total investment cost is exactly the same. Let's just use this example. Say you bought your original share for 950 rupees. Well, after the split, that 950 will simply be allocated between the two new shares for accounting purposes, maybe 570 for the car business and 380 for the truck business. The key thing to remember is your total cost of 950 doesn't change one bit.
And just a few other really important points to keep in mind. First, there is no dilution. Your slice of the overall pie doesn't get any smaller. Second, for tax purposes, the clock doesn't reset. Your holding period starts from when you first bought the original stock, which is a huge plus. And third, those new shares, they'll just show up in your DMAT account automatically, no paperwork, no fuss.
All right, so where does this all lead? Let's look ahead. We're about to witness one auto giant transform into two focused powerhouses, each ready to carve out its own unique future.
So this is what you're left with. On one hand, you'll have the new passenger vehicle company, a high-growth, tech-driven player that's absolutely dominating India's EV space and has the global prestige of Jaguar Land Rover. On the other hand, you'll have the commercial vehicle company, a stable, market-leading giant whose success is directly plugged into the growth of India itself.
So what's the bottom line for investors? Well, you're not losing anything. Instead, you're gaining clarity. This split creates the potential for what's called a re-rating, which is just a fancy way of saying the two separate pieces could end up being worth more than the combined whole was. But honestly, the biggest win here is choice. For the first time, you get to decide, do you want to bet on the high-tech consumption story, the foundational infrastructure story, or do you want to keep a foot in both worlds? And that really is the final question, isn't it? With this demerger, Tata Motors is creating two very distinct paths forward. As these two focused giants step out on their own, the big question for the market and for every single shareholder is,